Good morning. It's Harvey Jackson. Just going to get through some of the news items. Futures focus report, Great Lakes shipping. So let's just get into it here. Canola, that's significant here, is we've got the 7.33 crush pace, 86.1 crush capacity utilization, and overall the whole year we're sitting at 90.6, and I think that will still give us a 12 million metric ton crush capacity. I guess the caveat would be what's going to happen April 2nd. That's going to be the question mark this week. And yeah, so if you just look at some of the numbers as we see it here, pretty good numbers for export and pretty good pace for crush. And we'll just have to see how this all plays out. Now that the eastern shipping lane is actually moving some boats around, now it could be just clearing boats that were already in place before they allow new ones in. It's possible, but I see a little bit more activity there. Here's just your Minneapolis wheat bullish and bearish stories. So you got Russia, Ukraine, Argentina wheat expectation for wheat to increase, and that usually is just wheat that's going to Brazil, but it's still an offset, right? So, and if we're looking at new kind of positions, we're looking at going long at 582. So the market has to pull back a little bit more before we'll go long again. I know we have some longs on already with some clients on the Kansas. So here's a corn mapped out, looking for a reversal. So that long position, get out and then go short. And I think that might be the key date will be this March planting intentions report that's going to come out this week. Soybeans position that's kind of set up there is enter long when we get down to 1003 and take profit as the market's going up. Here's your Great Lakes. It actually increased in percentage points. It was at 8 something, but it's gone up a little wee bit. But as you can see here, there's a cluster of boats starting to show up over in the Great Lakes. I have a pin on a tanker that was sitting at Thunder Bay and now moving out, but you can see there's a little bit more activity in a lot of areas there too. And the pinch points is to get through and get out into the St. Lawrence and get transloaded if they need to. So here's some of the other news. Russia, Ukraine talk continue for ceasefire. There's a little bit of back and forth on what's going on there, but they're just that shipping lane might open, even though Russia is not really talking about moving a whole lot of wheat between now and June anyway. You can see the commitment of traders have pulled off more positions on corn. And same on soybeans as well. Here's an article that I found interesting, or the cattle on feed. The key feature there is the placed in February was lower than the trade average by 3 percentage points. So that is a probably a bullish feature. So any clients that had cattle positions that were looking red are probably going to turn green today. And here's the other feature that's happened over the weekend. This liberal, that so-called liberal, because he's not even elected, but he's the prime minister, called an election. So we'll see how that all plays out. Hopefully he gets in front of the camera and maybe even does a debate, because I don't think he can win if he's actually continues to be in front of the camera. Canola's down, rapeseed is down a little bit as well. Soybean oil just flat, and your soybeans are basically just down a penny as well. And the wheats are all down 5 to 6 cents. So let's just have a look at it. You can see that the canola has fallen off and not wanting to trade above that 10-day moving average, and it's kind of putting a lid on it. So there's a bit of weight on it on this market. We could actually go back to those previous values the way it's kind of trending at the moment. New crop lower as well. 10-day moving average kind of putting the lid on it as well. Here's the differential. So we're looking at $193. European rapeseed being more expensive than Canadian canola. Now, one thing that I can't do on the marine traffic is know what boats are getting loaded. Now, are they loading canola destined to go to Europe? I don't know. Yeah, we'll have to find that out. So that's the leg that we had last week from the lows that we had on the European rapeseed. It recovered pretty substantially. Here's your soybean oil. It just like the canola, it's actually pulled off a little wee bit. Yeah, maybe that's a good sign. Not a good sign, but sad face, I guess. Anyway, of all the oils that's holding up pretty well, it's the crude palm oil. West Texas actually has got a pretty good increase in price off the bottoms. So if there's going to be any ties to, uh, um, you know, producing fuel from veg oil, maybe the West Texas can give it some help there. Here's your soybeans. It's a downward trend, has not recovered. It looks like it's still going to pull down some more before it. We'll look at maybe going long there. Soy meal is still in this kind of channel, going sideways to lower. Canadian dollar, top end of the channel, but still looks like it's just trading inside that channel, really, ultimately. Let's have a look at wheat. There's probably nothing to talk about that's positive here either, because you can see all of last week it actually went from the top end of the channel to the bottom end of the channel. Now, it's still relative okay values, and we'll see if the shipping in the Eastern Corridor will actually help pull that market up, as we'll get a fair bit of movement pretty quick. Here's your Chicago wheat. Your moving averages are definitely keeping a lid on it. Red winter, same. Actually, your moving averages are maybe a bit of a support in that case. And milling wheat, a little bit of an increase, not strong there at all. And your corn still looks like it's got a little bit of pressure there as well. So this is the next report that's we have to pay attention to, is the March 31st U.S. Prospective Plantings report.